Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get you the headlines. The Nifty and the Sensex give up on some of the early momentum in trade. They're trading in a narrow range with metal shares rallying.
SBI approaches Tata Group and TPG Capital to sell its stake in Jet Airways. That's a Bloomberg Quint exclusive.
Punjab National Bank will sell 13% stake in its housing finance arm to General Atlantic and Varde Partners for 1,850 crores.
Accenture hikes its full-year revenue forecast for its second quarter performance, surpasses analyst expectations.
All right, all that coming up, but let's start with a look at the markets. Yatin is here with us.
Good afternoon, Neera. And the market, despite being slightly range-bound in trade today, we have seen some good moves coming in as far as stock-specific action is concerned. Let's talk about the Nifty 50 first. We are around that 11,600 mark, advance decline ratio. 35 advances on the Nifty versus 16 declines. If you look at the top gainers at this point in time, four-wheeler majors, Tata Motors as well as Maruti are gaining anywhere between 2.5% to 3.5%. Vedanta, Tata Steel and JSW Steel, these are the metal names which are doing extremely well on the benchmark indices, 3% and higher for all of these stocks in trade today on good volumes, mind you. What's not doing well, on the contrary, is the likes of GAIL, IndusInd Bank. These are the top losers on Nifty, 2% down for all of them at this point in time. What's also not doing well ahead of the auto numbers, which will get reported on Monday, is the likes of Bajaj Auto as well as Eicher Motors. Both of these stocks are under pressure, 1.5% down for all of these stocks. Titan also, after hitting that 1 lakh crore market capitalization mark yesterday, has seen some profit taking. Among the active securities, we have Idea Cellular. That stock is up 7%. Remember, it went X rights, in trade today, and so is the case with SBI as well as Yes Bank. These are the few active securities which are witnessing some good action in the future and option segment.
Yes, and thank you for that. Punjab National Bank is going to sell 13% stake in its housing finance arm. The public sector lender has already laid out its plans of divesting some of its stake in non-core operations to shore up capital. Shefali Malik is standing by to take us through some of those details. Shefali.
Well, in the morning today, Punjab National Bank put out a press release saying that it is selling about 1 crore shares each in PNB Housing Finance to General Atlantic and Varde Partners, each at about 850 rupees per share. And this stake sale will amount to a total of about 1,850 crore rupees. So basically, what it will do for PNB, it will basically help the banking company in shoring up its capital base. Remember, at the end of the third quarter, it had a capital adequacy ratio of just over 10%, slightly above the first threshold of the PCA mechanism. So the bank was in need of liquidity, and with this money coming in, it will help the company in shoring up its capital base. And if we look at the deal, it's at slightly lower valuations for PNB Housing Finance. Analyst Fraternity was valuing it at about 900 to 950 rupees per share. So in comparison to that, it has come in slightly lower than that at a price of about 850 rupees a piece. So there's a slight bit of a disappointment on that front, but for PNB, it bodes well. PNB will continue to hold roughly about 20% stake in PNB Housing Finance post this transaction.
All right, Shefali, thanks so much for that. Lenders, including State Bank of India, have reached out to two potential investors for Jet Airways. This comes just days after they took control of the airline. Remember, lenders are working on a strict deadline to exit the exposure in about 2 months. Vishnath Nair reports.
Just days after taking over majority equity in Jet Airways, lenders led by State Bank of India are currently in conversations with two potential investors, US-based private equity investor TPG Capital, as well as Tata Group, to take over this majority equity that they hold in Jet Airways. Currently, lenders own about 50.5% stake in the company and therefore are in the controlling seat with regards to all the developments at Jet Airways. Only on the 25th of March did Jet Airways' board approve a resolution plan that was proposed by these lenders, which involved not only transferring this equity to the lenders, but also the ouster of Naresh Goyal, the founder chairman of Jet Airways, as well as his wife Anita Goyal from the board of the company. Naresh Goyal has also stepped down as a chairman of the company. There is an interim management committee at Jet Airways which is currently managing the day-to-day operations of the company, while lenders have also agreed to pump in about 1,500 crore worth of debt support on an immediate basis to take care of lesser payments as well as employee salaries which have been pending for many months now. Now, if either of these investors do end up coming into Jet Airways, remember these conversations are only preliminary, but if either of these investors come in, they would have to bring in about 5,000 crore worth of fresh capital into the company, which would include repaying the lenders for their 1,500 crore support, but also taking care of the capital shortfall of about 3,500 crore that exists at Jet Airways. Now, remember that the plan that is being implemented in Jet Airways has a 180-day deadline because of the RBI's February 2018 guidelines on restructuring loans. So banks have to either restructure the existing debt of the company or sell that equity stake that they're holding before that 180-day period ends by the end of June. Otherwise, the company will end up at the NCLT for insolvency proceedings.
Vishwanath, thanks for that. Technology giant Accenture raised its full-year revenue forecast after its second quarter performance surpassed analyst expectations. Agam is standing by with some of those numbers. Agam.
That's right. Well, Accenture has had a rather steady quarter when it comes to its second one in this financial year, which ended in February, considering it not only saw revenues rise by as much as 9% on a year-on-year basis. In constant currency terms, these revenue numbers were ahead of consensus expectations as well as higher than your guided range. And besides that, the company has also increased its guidance going forward for the full year to as much as 6.85 to 8.5%. And moving in, the kind of implications that this may have with respect to Indian information technology companies is, considering the momentum in the US augurs well for the likes of TCS, Infosys, as well as Cognizant. Coming down to communications, media and technology verticals, again a positive for Tech Mahindra, Wipro and HCL Technologies. And we've seen strength in the applications business, again something that bodes well for HCL Technologies as well as Infosys. So positive sentiment as far as Accenture is concerned on the Indian information technology sector.
Agam, thanks so much for that. Some foreign portfolio investors have been banned from trading in Indian equities. This comes after they did not comply with the market regulators' norms mandating that the end beneficiary of investments made through such a route be declared. Sajid Mangat joining us with the details. Sajid.
That's right. There was a March 20 deadline where the custodians were supposed to ensure that all the foreign portfolio investors have complied with the ultimate beneficial ownership guidelines or KYC documentation. This comes from the back of SEBI's watered down regulation for beneficial ownership disclosures, which happened in September. The SEBI in September had given an additional 6 months to all the foreign portfolio investors to ensure that this documentation is done from the client level. We understand from custodians that nearly 601 FPI entities were singled out because they failed to give the KYC documentation. Now, custodians also maintain that there are 3 reasons why you have such a high number of FPIs. One being that many of the accounts are dormant and they don't have much of assets in it, and so the FPI did not want to go ahead with the additional compliance levels which were there. So these levels, these entities will eventually die out or will close out over a period of time. The second being the disclosure of private details like fund manager's name, or for that matter his home address, or phone numbers or passport details. Now these are something which many of the quite a few of FPIs are not willing to disclose because of the strict privacy guidelines that are there in their countries. And if worse come to worse, they're willing to exit India if they were forced to disclose these guidelines. The third one is that this ongoing due diligence, because it took many of the FPIs were under the impression that SEBI would extend the March 20 deadline by a month or even a quarter, 3 months, but it didn't happen that way. And so what happened was influx of all the documentation happening in the last week, because a month prior to March 20, the level of compliance was only 30 to 40%. And so because of the huge influx of documentation that happened, quite a few of the FIs got stuck, and their KYC was not cleared by March 28, and hence they had to be put on the list. So that's a process which is going on, but overall it seems that many of the FPIs are trying to consolidate the operations in India, going through minimum number of entities, because now the ultimate beneficial ownership guidelines makes it even tougher for them to do any kind of investment unless full disclosures are made to the regulators.
Sajid, thank you for that. Let's move on. MSTC had a weak debut on the bourses, listing a 10% discount to the issue price. The state-run trading corporation is now keen to make a mark in the e-commerce business. Yatin spoke to the company's chairman and managing director, B.B. Singh, to find out how much it's hoping to earn from its various verticals.
E-commerce has been the mainstay of MSTC Limited. This segment we have diversified into many other things. We started with the e-auction of scrap, but thereafter we have added too many commodities into our kitty, and there has been exponential growth in e-commerce since last 9-10 years. I think the growth has multiplied by almost 11 times in last 10 years. So this is a very upcoming business segments for MSTC Limited, and it will continue to grow because we have not tapped the potential what is there in the market in e-commerce sector. So we hope that with our expertise and our endeavor, we will be able to achieve greater milestones in e-commerce business.
Okay. Mrs. Singh, talking specifically about e-auctions, yes, last time when you met us in the studios, you specifically mentioned the fact that there are a lot of mines also which will be auctioned. A lot of commodities also are likely to be auctioned, and your platform probably would be that one thing that everybody would be looking forward to. So if you could tell us, in the near term, in the medium term, do you think all of these auctions, upcoming auctions, especially from state governments, will probably add significantly to your revenues and profits?
Yes, in 2014, when Honorable Supreme Court has entrusted MSTC for conduct of the e-auction for coal blocks, which were deallocated. So that was the time when we started our business for the e-auction of mineral blocks. If you talk about non-coal mineral blocks, the Ministry of Mines Government of India has nominated MSTC for conducting e-auctions for the major mineral blocks as well as for minor mineral blocks. Ever since the MMRD Act has come into being in 2015, we have been conducting regular mineral blocks for major minerals on behalf of the states. This segment is going to grow exponentially in the days to come because there are umpteen number of major and minor mineral blocks which are slated to be sold through e-auctions platform. Okay. So we foresee a very huge business opportunity in mineral sectors. As far as minerals are concerned, be it lignite, barite, chromite ore, manganese, iron ore, all the minerals are getting sold through the e-auction platform of MSTC. So going forward, we foresee a huge business opportunity in mineral sector itself.
Another state-run company that's going to hit the bourses is Rail Vikas Nigam. The IPO opened for subscription today. The government intends to raise about 477 crore by selling 12.2% stake in the company. Somit Sarkar caught up with the management to discuss their order book. Listen in.
Out of 77,000 crore work, about 30,000 crore work are those which will take longer time to complete. About 5 years to 7 years, and balance about 40,000 crore. We are working to complete them in next 2 to 3 years.
Is the average time completion for this entire order book of 77,000 crore?
That will go from 5 years to 7 years because the long gestation period works, that particularly those of hilly terrain, Rishikesh, Kanprayag and Bhanupali, Bilaspur work. Those works will take time because a lot of tunnel construction works are involved in that. In case of Rishikesh, Kanprayag, out of 125 kilometer, we have about 105 kilometer track in tunnel.
Okay. Now, in the last 3 years, how has your order book grown? And going forward, what is the kind of growth rate that you're expecting when it comes to the order book?
growth in order book is not very, not smooth. It takes a there are spurts. This year we had a spurt of about 8,000-9,000 crore. For a few years there was, for 1 year there was no order, and suddenly we got an order of 26,000-30,000 crore. So this is, there is no established trend how it grows. So it is purely at the discretion of Ministry of Railways, the order book grows. So it is based on the decision of Railway Board and Ministry of Railways. They decide discretion. They exercise their discretion in transferring work to Rail Vikas Nigam Limited.
Let's move on. The Nifty has gained nearly 15% in this financial year, but the rally has not been broad-based. Sumit's gone through the Bloomberg terminal to just see how many stocks tracked by more than 10 analysts have managed to meet their target price this year. Sumit.
So if you see, the numbers not at all encouraging, because at least 4/5 of the stocks tracked by at least 10 analysts have failed to live up to their expectations. Now we have compared the target price as on the start of the financial year and the current one, and if you see, nearly 79% of these stocks have missed their mark, which is the most in the last 7 years. Now among the stocks that have missed the target by the most, Navkar Corp tops the list. Now at the start of the year, analysts had set a target price of nearly 229 rupees for the company, but now the share prices are trading at close to 40 rupees. Now this is because of a bleak outlook towards the container freight station industry, lower volumes that the company has reported, high interest cost, and because of foreign exchange losses that the company had seen in this financial year, that the share prices are now trading at only 40 rupees per share. Now second on the list is DHFL. Now the share prices of this company is trading nearly 79% below the target price set by the analysts at the start of the year. That is because of the liquidity crunch that we had seen in the NBFC space and because of the fraud allegations that were there on the company. Third on the list is Skipper, which is trading nearly 77% below the target price on the back of lack of orders, slower project execution, and high raw material costs, which also resulted into lower margins for the company. Fourth on the list is Simplex Infra, which is trading nearly 72% below due to slowdown in execution and because of elongated working capital cycles of the company. While fifth on the list is Vodafone Idea. Now that stock is trading nearly 67% below the target price because of a weak growth, losses seen in the customer side and on the market share side, and because of a rights issue which will lead to a significant equity dilution for the company. Now on the outperformer side, if you see, Bata India shares rallied as the company witnessed a change in its revenue mix. Along with this, a lower input cost also aided the company's margins, and a cut in GST rate also increased the growth outlook for Bata India. Second on the list is Adani Power, which is trading nearly 80% above the target price set by the analyst at the start of the year, because this is after the Supreme Court allowed renegotiation of power tariffs in the Mundra project that the share prices have rallied so much for Adani Power. NIT Tech comes third on the list, which is trading nearly 57% above the target price on the back of the revenue growth and strong margin improvements seen by the company. Divi's Lab, now that stock outperformed due to a strong traction seen in the CRAMS and the generics business of the company. Along with this, opportunities led by supply disruption in China also led to the rally in the share prices of Divi's Lab. Lastly, Bajaj Finance. Now this stock is trading nearly 57% above the target price set by the analysts at the start of the year. Now this is on the back of the strong AUM growth seen by the company and due to strong disbursements reported by the company in the financial year 2019, despite the liquidity crunch that we have seen in the NBFC space, that the stock is trading now 57% above the target price.
All right, Sumit, thanks so much for that. India's got its first $1 billion online grocer after Big Basket raised $150 million in a fresh round of funding. Nishant Sharma takes us through the investors that have jumped on board in the latest round.
Well, the board of India's largest online grocery startup, Big Basket, has approved a fresh fundraise about $150 million, also making Big Basket the first unicorn in the online grocery space and the second unicorn in 2019 to achieve the unicorn tag. Now, as per the filings made to the resort of companies, Alibaba is putting in about $50 million in this round, followed by South Korea's Marai Asset Management, which is putting in about $59.5 million. And lastly, CDC Group, which is putting in about $40 million. Now, this round's value, as per Bloomberg Quint's calculations, is about $1.2 billion, and it will give enough, firepower to Big Basket to take on Grofers, which also raised earlier last month, about close to $60 million, valuing it at $400 million, and also to take on other two big giants such as Amazon and Flipkart in the online grocery space.
Nishant, thank you for that. Prime Minister Narendra Modi set out on campaign trail yesterday with rallies in Uttar Pradesh, Uttarakhand and Jammu and Kashmir, from listing the government's achievements to criticizing the opposition statements. Here are some of the highlights from yesterday's rallies.
जमीन हो, आसमान हो या फिर अंतरिक्ष, सर्जिकल स्ट्राइक का साहस आपके इस चौकीदार की सरकार ने दिखाया है। अब देश का गरीब भी कह रहा है, कांग्रेस हटाओ, गरीबी अपने आप हट जाएगी। ये सैड शब्द थिएटर में बड़ा कॉमन होता है, बार बार सुनाई देता है। कुछ बुद्धिमान लोग ऐसे हैं, जब कल मैं ए सेट की बात करता था तो कंफ्यूज हो गए, समझे कि मैं थिएटर के सेट की बात कर रहा हूं। हम ऐसे बुद्धिमान लोगों पर रोए हैं, हंसे। सपा का स, आरएलडी का र और बसपा का ब, मतलब शराब। अच्छी सेहत के लिए शराब से बचना चाहिए कि नहीं बचना चाहिए? तो सपा, आरएलडी, बसपा, ये शराब आपको बर्बाद कर देगी।
All the time on the show. Thank you so much for joining us.
Coming up next, a conversation on the Congress's proposed minimum income guarantee scheme. Is it workable? We asked Praveen Chakravarti.